Bring it home, because we are in Kenya, a look at the key performance indicators within the hospitality space so that you can know how to get bums in beds and measure the KPIs so that you get a high ROE and then you can be HAPPY. Wayne.
Great. I see the time hasn't started yet. So. It's good to see the room is still pretty full. I was hoping it was going to empty out so I don't have to present anymore, but here's what it is. Hopefully it'll only take about 10-15 minutes of your time. Just going to whiz through some of the kind of key indicators from a hospitality market perspective in some of the key markets in East Africa. And this is based on STR data, which generally tracks, won't be the entire market, but normally tracks the most, the upper end of supply, those that contribute, so the branded supply. So it gives you an indication. But in some of these markets, it might only be 7 hotels or 10 hotels, but at least gives us an indication of what's been happening. So we're going to focus on 2025. I'm also going to look at this comparative. I think this will probably be the last conference that we start comparing anything to pre-COVID 2019. I think that's hopefully is almost done, and you'll see that the indicators are above 100% in most places, so then it's kind of pointless looking at it. So just overall, if we take an overall weighted snapshot across Ethiopia, Kenya, Tanzania, Uganda, and Zanzibar, I mean, we split out Zanzibar because we feel it is a kind of completely separate market, although part of Tanzania. Very different characteristics to the Tanzanian market. We haven't got data on Rwanda, so we haven't included that. So if you look at kind of weighted occupancy at 56%, it's not bad, but it's not great. It's obviously showing you that, I mean, we'll see that a lot of it's actually due to the demand is sometimes there, but it's often the supply that's actually caused it. And to be honest with STR, they don't always track the supply dynamically. So what they say is supply growth here is probably not completely true, because they'll only start contributing to STR once they are performing or have a few months of performance or years. So you can see there in terms of demand is up 121% versus 2019. Occupancy is generally up 117%, so that's good. And ADR relatively stable. So if we dive in, we look at Ethiopia first. So Ethiopia historically, because of the hotels that you look at, it typically includes some of the higher end hotels like the Hyatt and the Marriott or Sheraton. The ADR is generally one of the highest in the market. But as you can see from 2019, it's actually dropped quite significantly. Obviously had a lot of economic issues there. So, and occupancy is slightly up it's down on 2019, but up on 2024. The ADR has dropped quite significantly. So there's also been a lot of new supply coming up in Ethiopia, and that has not necessarily been tracked here at 125%, but the demand is up. So it's showing you that although demand is up, there's still the occupancies are not what they were, and the ADR is not as high. So also what happens is new supply coming in, and often the rates will drop. Tanzania, occupancy is slightly up on 2024 and also up in terms of 2019, just over 100%. Supply, there hasn't been much new supply there, so it's a market that's been kind of quite stagnant. They've been having some issues in the last few years. With the change in president, we've started to see things increase more from a private sector perspective and things unlocking that were previously constrained. So starting to look quite positive. We started to see the first few months of this year started to increase. And that should, start to increase, and then hopefully we'll start to see new supply coming in, because there's been hardly any new supply in that market. Whereas if you look at Zanzibar, it's completely the opposite. This supply here is not, as I mentioned, as dynamic. I think there's a hell of a lot more in here than there was than 111% on 2019. But if you look at the ADR, this is definitely the star performer in the region. It's something that's gained huge amounts of traction, increased air access, the Dubai links and Qatar, has opened up the market completely, and as an alternative to Seychelles and Mauritius, and the rates at $243 has increased, significantly. So, and it's that market that continues to grow. There's also, as you can see from the Mora, there's been a lot of new supply. TUI have done a number of deals there, and new supply have come in. There's two kinds of markets there. One is the kind of longer, all-inclusive kind of package market, as well as then there's some smaller boutique market that links with the bush and beach in Tanzania. Kenya, I think everybody in the room knows exactly what's been going on here. I mean, we've seen some changes since 2019. There were some corrections in supply, and that actually dropped. But now that seems to be up again. There's been a lot of new supply, especially in Westlands. Definitely not completely reported here. Demand is up overall. Obviously, in the last year, due to the US, cutting in terms of budgets of the NGOs, that's had an impact. The rate overall has dropped slightly. So it is sustaining it. We've seen some move into other markets, but it also depends on where your location is, because this can vary significantly. But at 49%, it's not looking great occupancy, and new supply is not slowing. So I would expect that to be, it's going to be difficult to get that to increase unless the demand generators are going to increase significantly. But it depends by market. So in some markets might be more oversupplied, and Nairobi is very micro in terms of Westlands, Upper Hill, etc., and some of the other markets. Uganda, in terms of recovery, ADR has dropped slightly. Occupancy is up on last year. They're starting to increase, starting to see some of that coming through. New supply, not a lot of new supply at the moment, but there is quite a bit in terms of the pipeline. And the Rev Par slightly up on 2019. So overall, room nights sold is higher than the supply has shown. So that's still a positive, but occupancy is still only sitting in that 52%. So this just shows you the bubbles of, in terms of size, room nights available, the size of the markets as well, showing you obviously Kampala, Nairobi being the largest market, and followed by Kampala and Dar es Salaam. But this, again, is what's been reported, obviously, from an STR perspective, which is not necessarily completely representative of the entire market. And then just to finish off, I think I've even well ahead of time here, but we can always have questions if you want. But this is just to show that there's still increased positivity amongst the markets. Developers are still developing, especially in Nairobi. There's been quite a lot of signings. The operators are very active, and we'll probably hear from them in the next session, which will get more of an indication. But a number of deals have been signed, and everybody seems to be well, from an operator perspective, obviously more bullish than from an investor perspective. But it's still, there are positive signs, and there's still growth out there. Obviously, more select where to position it and how to position it, and that's crucial in terms of location, in terms of markets you're going to attract, and where your demand generators are coming from. That's me, short and sweet.
Thank you so much.